There are three ways that we trade in the stock market, and today I will take you and I will show you my three favorite strategies that I have used in the markets for the last 30 years. For those of you who don't know me, I'm Rob, and for those of you who do know me, hey, welcome back. Good to see you again. Good to have you back. Today, we're going to go to the charts and we're going to have a look at those strategies. We're going to have a look at a system that makes us profitable, that gives us an edge in the market. And after we've been to the chart, then we're going to talk about those three things that we need to make us profitable in the markets. Whether we trade Forex, whether we trade futures, whether we trade stocks, doesn't matter. Indexes, whatever you're trading, this will work for you. This will make you money in the long run. But what you have to understand is it's not the squiggly lines that make you the money in the stock market. It's not the little bars, not the little tails, not the little candles that make you the money in the stock market. What makes you the money in the stock market is your business plan and the way you approach the market and how you become profitable. A win rate in the stock market is meaningless unless you can be profitable with that win rate. So many people tell me that a win rate is important, but it's not, because you can win 10 trades and all of them can be $10 wins, and you can lose $1,000 trade and you're in trouble. There's no point to that. It's pointless. It's completely pointless. It's not going to make you profitable in the markets. You can use the system for an edge on any time frame. You can use the system on any product, as long as you just use it with the view to it's just a way for you to get a probability trade in the market. To understand that when you have a system in the markets, whatever system you paid for, if you paid $1,000 for a fancy system, if you paid $5 for a fancy system, if you got it for free, like with me from this account, it's totally free. I'm giving you information. I know you're taking your time to watch the videos. You're taking the time to find out how to trade the markets. But that's up to you. You can take information from every trader, put it all together, and design your own great system that'll give you good probability trades, that'll give you that edge to make you profitable in the market, or to give you that so-called win rate that you talk about. But at the end of the day, if you don't get your psychology right and you don't get your mind right, you can learn from the best, or you can be the best trader ever on squiggly lines. But when it comes to real money and it comes to putting it in the market and taking those trades, that's when it becomes impossible. That's when it becomes a difficult thing to do. So this is what I'm showing you guys to get around. This is what we go over again and again and again. And I point out to you guys over and over again that the market's a 50-50 game. Why is it a 50-50 game? Why is the stock market a 50-50 game? Rob, how can you tell me the stock market's 50-50 when I've got a system? When I've got a system that should give me an edge, I should be winning 60-70% of my trades. You just heard me say that a win rate is meaningless. Perhaps you heard me say that. I don't know. Here's the point, guys. The market is made up of buyers and the market is made up of sellers. Guess what? They all want to win. Every single one of them believes they've got a high probability win rate, a high probability system that's going to make them profitable in the stock market, trading Forex, trading futures, trading contracts, or even just investing in the markets. Trading is risky. 70-80% of traders lose money. And by the way, that's swing traders and position traders. If you're a day trader and you're trading on the 5-minute charts or the 1-minute charts, guess what? 99% of traders lose money there. So if you think you're going to do this the quick way and the easy way and the fast way, well, I've got some interesting news for you. The statistics are against you. But everybody likes to believe that they're a bit better than everyone else, and maybe they'll be the one. They'll be the one, that chosen one that's going to make it. Unfortunately, guys, it's very seldom that that's going to happen. So if you're thinking you're the chosen one and you can trade the 5-minute charts and you're going to be successful at it, good for you. I hope it works. But just so as you know, trading is risky. And if you don't like risk and you don't like losing money, you probably shouldn't be trading. Look, what I'm going to do right now, I'm going to take you to the charts and I'm going to show you a high probability trading system which uses no indicators. We simply use price action to get our pricing. We simply use price action to get our trades. Effectively, we use support and resistance. Sometimes we add a bit of supply and demand, or maybe a fair value gap, or something to that effect. We'll even use trend support, trend resistance, as long as we get an idea of where we're going with our trades. We're going to go through the charts. And then once we've been to the charts, I'm going to discuss with you the 3 ways that we trade to make money and how you can be profitable. Let's go look at the charts, guys. You'd like to know how we trade price action, and I'm going to show you a simple way that we do it. And this is how you need to trade in the markets, because, adding so many indicators and so many things to the charts can overcomplicate things. Now, it may look a little bit overcomplicated here because I've added a couple of little lines into the chart, and I've kind of put this here and it looks like there's indicators, but there's no indicators here, guys. This is just a trade that we're looking for. There's a trend resistance, there's a main resistance, there's a daily support, there's a daily support, and there's a trend. That's as simple as putting your lines in gets. It's not complicated. It's not end of the world stuff or anything to that effect. This is one that's gone the other direction. Here's a trend, a daily support. There's a demand area, an area where there's a lot of orders waiting, supply and demand. And as you can see, this product is in a trend, and it's going up. The trend is your friend, and it keeps on going up, going up, going up, going up. So you can keep on buying into this. Counter trend would be when it comes down and it breaks these levels and starts coming to the downside. Now, how do we draw these levels in? I mean, how do we add these levels into our trading? There's a gold trade that's losing at the moment. Not every trade's going to win because the market is a 50-50 game. How many times I have to tell people that, I don't know. You see here, we've got a trend support line in. So that's trend support. That's how we operate with it. We draw it in. But how do we get these levels? And where do we get these levels from? How do we draw them in? This is a trade that's ranging. It's in its range. It's staying there. It's not breaking out, staying in its range, and it's trading between the resistance and between the support. Once again, how do we get these levels? Here's another one. Here's the DAX, here's a daily support level. Let's go and have a, oops, don't move that. Don't want to move that around. Let's go and have a look. Here's the S&P, and here's a support and resistance level, which was drawn in a long time ago, and it broke through there and it went up and came down. Let me show you how we draw these in and make it a little bit easier for you. So let's use the FTSE as an example. It is ranging, but I'm just going to use it as an example. So let's remove all the drawings. So what you get when you come to the chart is you get a picture like this, and you think, well, I want to take a trade. Should I go long or should I go short? How should I take this trade? And we're on the 4-hour chart because we're trading on 4-hour levels, and we're thinking, well, I'd like to take a trade, but I'm not sure where to take the trade. What you do, you take it to the day, and now you've got a chart that looks like this, and we put it on a line chart. Now, why do we put it on a line chart? A line chart gives me closing prices, and I don't want to take trades on the tails because those are highs and lows. I don't want highs and lows. I want closing prices for each day because the day is a more reliable level. Then what you do is you look for the top areas where it keeps hitting the top. That is your daily resistance level. Now, why do I draw a rectangle in and not a line? Because a line is very, very precise, and the market is looking for other buyers and sellers and their orders. It's not looking for a precise point to turn around at. And a line kind of psychologically messes you around because you believe it's a wall, and it's not a wall. It's an area where there are some orders lying about. That'll be your resistance level. Every time the price gets to this level, it tends to want to come back, and it's a magnetic level that keeps everything, the price keeps on going there. The more times it hits here, the more chance it has of breaking through either side, by the way, just so that you understand that concept. Then what you do is you look to the bottom side of the trade, and you're looking for a support area, an area where the price says, you know what, when I hit this area, I'm at the bottom. But this one is quite wide, but that's how you have to deal with it. This one likes to stop there, likes to stop there, likes to stop there, likes to stop there, stop there, stop there. So it is a resistance, a support level on the daily chart. Now you've got your support level on the daily, and you've got your resistance level on the daily. This price is trading in its range, and it's trading between the two. Probably one of the easier trades to take. And if you want to see how to take these or to draw these levels in on, say, a trending chart, then go and look at my previous video. It will show you clearly there how you can draw these levels in on a trending chart, so that we don't have to make this video too long for you today, and you don't have to sit here all day watching this over and over again. For those of you who do want to watch, go and watch the previous video. It will show you clearly how you can draw this support and resistance in on a trending chart like that. And it's exactly the same. There's no difference. Now, what you must take note of on your daily chart is that you have this bullish run into this, and then it starts to range. When this happens, it will normally resolve to the upside, but it can also be considered double tops, triple tops, and then that can also resolve to the downside. So it doesn't always resolve to the upside. Normally, if there's a little flag pattern or a pennant, it will resolve to the upside. In this case, it hasn't determined its direction and is staying in that range, so you can trade within that range. And on a daily chart, this would be a long trade. So now you look at your bias and you say, actually, on my bias, my feeling is because of the daily result here, this looks more long than short. Then you take it to the time frame you want to trade on. In our case, it's the 4-hour chart because I'm a tortoise trader. I like to trade slowly, and I see what I've got there. And you can clearly see that it's broken away from the support. This green candle is closed. There's even a second green candle. But if one green candle has closed, you can take the long trade and go on up. Same applies to the short. If it comes off the resistance and one red candle is closed, simple, just take the short and go. Put your stop loss beyond the level, put your stop loss beyond the level. And that's as simple as it gets. Nothing complicated. You don't have to wait for the stars to align on the left and the moon to turn into green cheese before you take a trade. You simply can take a trade based on that and that alone without any over complications. Where I do like to add a complication is if it breaks through the resistance and it wants to go long, then I would rather wait for it just to come back and retest, just give you a little point here, then you can go long from there, just to ensure that it doesn't do something like this. So you clearly see it breaks through the support and then you get a big red candle. Now what a lot of people would do is they would immediately take the short and carry on short with that because it's broken through. What I prefer to do when it breaks through a level which it hasn't broken, which it's been hanging around for a long time, then I would prefer for it just to come back and do a retest and then give me another red candle out. But if it continues on in and goes back up and breaks back out, then it's going back, staying in its range. That's why I like to retest breakouts, because of scenarios like that one right there. But you don't have to get overcomplicated. Keep it simple. You get a nice green bar like that coming out of the level. You've actually got a nice long trade, most likely going all the way up to the resistance. Nothing complicated, nothing unusual. Now, while you're in this area, you're in your 4-hour charts now. You're not in your daily anymore. Now you've dropped down a level and you're in your candles. Why do I use red and green candles? Because I can see the red candle close. I can see the green candle close. I can see the tails on the candle. You know what a tail implies? It implies there's a lot of buyers getting back in here. Yeah, it implies a lot of sellers getting back into the market. You can see the long tails. And also, you can see undecided areas where sellers and buyers are not sure which way it's going. So you get the tails on the top and the bottom. I don't see many here, but you do get that as well. So the tails tell you a lot. You know, the candles can just sort of give you a turnaround, but don't rely on the candles to trade, because what the candles do is what this candle tells you is what's going to happen perhaps in the next candle only, but it doesn't tell you the overall picture of the chart. Also look for patterns in the market like head and shoulders. Head and shoulders, great pattern. I love the head and shoulders pattern, one of my favorites. So, do yourself a favor, download some stuff on Google that gives you patterns of charts. A trade on a system, a trade on a chart is just a high probability trade. What you're looking for is a high probability, because every trade that you take is based on the probability of what happened in the past is going to happen again in the future. That's how we trade. Now, on this 4-hour chart, I can clearly see a couple of things that will be useful to me. One of those things is there's a supply of money up here, which is caused by, you get the green candle and then you get the big 3 red candles coming down behind it. That means there's a supply of money lying here. There's orders lying in this area. On the opposite side, you would have the demand of money, where it's the red candle and then the green candle is going up. What I normally like to see for a supply of money is the candles, at least 3 candles behind it, giving you that confluence. Then also, you'll see here, there's what they call a fair value gap, where this has gone past that tail and that's gone past that tail, and there's a big gap in the middle here. That is a fair value gap of money. So there could be money lying in this particular area as well. And price does like to go and fetch that money and then come back down. What I suspect will happen in this case is the price will rise to the supply of money and then come on down to that area there. But we don't want to overcomplicate things. But if you want to know a little bit more about supply and demand, I do have videos in my series which cover supply and demand in depth if that's what you want to trade. It is something that you can also trade, and it helps you with your trading. So now that we've been to the charts, and now we know how to trade price action, or we have an idea how to trade price action, because you don't learn this in a day. If you believe you learn how to trade in a day, then you can become a doctor in a day, you can become a lawyer in a day, you can become a car mechanic in a day, you can become an electrician in a day. No, I don't think so. I don't think that's gonna work. No, it takes time. This is a career. This is something you have to learn. This is something you have to get through. And I keep reiterating that to people, that this is not a cash machine. This is not an ATM or a casino. This is a place where you come, you learn to do it like any other career. You learn to do it and you learn to trade and you learn to understand the market. And once you know what you're doing, it gets easier. And just like any other job or any other business that you have, you get around the difficulties and you start creating your own systems to make it easier for yourself, and you start becoming profitable. The basis of it is you need a business plan to become profitable. This business plan I have is 2-step. You don't need to write it down. Very simple. Basically, you've got to keep your stop loss the same right across all your trades. In other words, 1% per trade, every single trade. And then you just got to second part of your business plan is you've just got to follow your invalidation, your stop loss up behind the profit and take profits as you go. Obviously not moving your stop loss when you're in a loss, not hedging or trying to break even from a losing position, but you can add to your winners. But the three strategies that I use to be profitable in the market, and most of you will know them, or the guys that are following me or that have watched my videos will know what my strategies are. And they're very simple, guys. There's 3 ways that I trade in the market. The first way is I trade with a trend. The trend is your friend. In other words, if a product is trending up, we go long. If a product is trending down, we go short, and we take the trades within the structure. And if you stick to that, you'll make a win 8 times out of 10. You'll do quite well out of trading with the trend. The second way that we trade is we trade in the range. A range is when it's going flat and it's not going up really and it's not going down really, but it's staying within a range and it's going along in that range. It's the easiest way to trade, because effectively if you find a product like that, you can effectively take a short every time it hits the resistance and take a long every time it hits the support, and it makes it so much easier. Those are the easiest trades in the world, the ranging trades. The more difficult one is the third one, and that is counter trading. In other words, trading against the trend, trading against the general market. You find a product that's run really high. I'm going to use this as an example where it's gone up rather than when it's gone down, but you can do it both ways. And this product is so overbought. You can see that this is at its end, but you don't want to use the supermarket mentality and say it's expensive, because in the markets, when something's expensive, it's good. When something's cheap, it's bad. It's kind of the opposite effect to the supermarket, where if something's cheap in the supermarket, you buy lots because it's like not going to happen again. And when it's expensive, you walk away. But in the stock market, when something's expensive, you want to buy more. You don't want to leave it on the table because it's a really good product. So now what happens when you counter trade? You can't just go short when the price is right at the top and you just feel like this thing's got to turn around and come back now. Because let me tell you something, it'll bite you. It'll keep on going. So what you got to do is wait for it to turn around, wait for it to break the structure. In other words, when it comes back and it breaks the structure, then you can take the counter trade, because then you've got an idea that the structure's broken, the trend is broken, and it's about to move the other direction, whether it's long or short. And that's the third way we trade. Those 3 strategies will make you money in the markets. Those 3 strategies will make you profitable. That's what you need to make yourself profitable in the markets. I hope that helps you. I hope that's the answer to your trading. And come back for more. We'll have another live show tomorrow. Tomorrow's the US session. And in the US session, we'll talk about it a bit further. If you've got any questions, because that's what my live sessions are about, guys. My live sessions are about chatting. In other words, you ask me questions on the chat, I answer them, and so on. Somebody did mention that we could have a Zoom or something to that effect, and we could all talk to each other. But I think that would get a little bit complicated as the channel becomes bigger and there's more and more and more people. And I think it just looks a bit silly having 1,000 screens all over the thing. I'll be the guy talking and you guys can just ask the questions on the chat. I don't mind doing that. And also, being on screen is not for everyone. It's not for everyone. It's my thing. It's something I do, but maybe you don't want to do it as well. So, there's a lot of people out there that don't want to show their face on YouTube or don't want to show their face anywhere for that matter. There's even YouTubers that don't show their face. They kind of have faceless channels. So I don't expect that. I don't think that's a great idea, actually. I thought about it at length, and I thought it's actually much better to stay with the chat. You guys ask the question on the chat, and I'll be the face, and I'll do the talking. And that's probably the best way to continue on with it. Guys, we do have the free Forex book down there for you as well. Obviously, the trade of the day is now mostly for the members who join the membership on the YouTube channel, and every day I put a video out for them and we discuss the trades and we tell them what trade of the day we're taking and where we're going in the market. So keep that in mind if you're watching the channel. Guys, I thank you for watching, and I hope that this video helps your trading and makes you into a profitable trader. Remember, the business plan is really important. If you want to know more about the business plan, go and check out my last video. That will show you exactly how to operate your business plan. Thanks, guys. Cheers and bye.